Hi, today we're going to talk about one of the letters that you may receive from the IRS, specifically the CP501, or Notice of Past Due Balance. We're going to dive into this notice, talk about why you would receive it, what information you need from it, and what to do as next steps. So join me as we learn a little bit more about this notice. Hi, I'm Holland King, a tax attorney that helps individuals and small businesses with their IRS problems. Whether it is an ongoing audit or past due taxes, I'm here to help. Today's video is all about the CP501, a letter that the IRS likes to send out whenever you have past due taxes. You'll receive this letter when there's a balance due on your tax account. This can be for either taxes that you didn't pay. If you filed a return, didn't make a payment, then they'll send out a 501 to notify you that you still owe that money. Or they could have made corrections to your return. This could have happened because the W-2 was corrected after you filed your taxes, showing that you earned more money during the tax year, and now you owe more tax. After the CP2000 has been sent out, and we'll talk more about that in another video, the next step is the CP501. So this notice tells you that you have a past due amount and that you need to pay it. It's going to give you several key pieces of information, such as when you need to pay it, how much you owe, how much is attributable to the underlying tax, as well as to the interest and penalties. So let's start with the header, because the header is one of the most important parts of this notice. In the top right-hand corner, not only will you find the notice type, in this case a CP501, which will tell you a lot about what notice you're receiving, but other information as well, including what tax year it's attributable to. In this case, the one that we have as an example is for 2017. If you owe multiple years, then you may receive multiple notices. Also, there's going to be a notice date on this letter. That date is important for the next steps that you'll have to take. Note that right now, the USPS is really behind on their deliveries. So the notice date might be several days ahead of when you actually receive it. In this case, the notice date is January 28th of 2019. The taxpayer may have received it after February 14th. That still doesn't change when the taxpayer has to respond by. Finally, there's some information, some identifying information about you. Make sure that this is actually attributable to you. The notice is sent to the last known address of a taxpayer. So if you recently moved into a house or an apartment, you may still be getting mail for the prior resident. Also, make sure that it's for you and that the IRS didn't mess up and send it to the wrong Social Security number or something like that. Moving on, the body of the first page is going to tell you how much you actually owe. Again, here we're showing a notice that has a balance due of about $9,500. You can see that the amount due is primarily from the underlying tax, but there's also penalties and interest associated with this notice. This is important because if you want to get the penalties waived, you need to understand how much they are. It is also going to affect the amount of interest because the interest is applied to both the underlying liability as well as the penalties. We'll go into penalty abatement in another video, but just know that for now, you can, in some circumstances, get the penalties waived, and that will also help reduce the interest. The interest won't go away completely, but it does help. So if you wanted to just pay this amount in full right now, then the amount you'd pay is the amount due. If you want to fight the penalties or interest, then you need to attack those separately and then pay the remaining balance. Finally, at the bottom of the first page is how you can actually pay it. One of the fastest ways is to go online to irs.gov/payments and make a payment electronically. If this doesn't work for you, or for whatever reason you're not able to use that website, then you can pay via mail, and you need to return this portion of the notice with your payment to the address that's listed on the notice. If you don't agree with this notice for whatever reason, if you've already paid the past due amount, or you don't agree with their calculations, then you need to contact the IRS to get a hold on your account so that you can properly respond to the notice and argue your viewpoint. Importantly, you need to respond within 30 days of the IRS notice date. So again, that date at the top of the letter, in this case, January 28th, is when you either need to pay the notice or respond explaining why you don't agree with the notice. If you do not, then penalties and interest are going to continue accruing. Also, the IRS is going to continue its collection actions. We'll talk more about those later, but the next step would be a lien on your property. and then a levy. Now is the best time to get this taken care of. Either pay it off or explain why you don't agree with it and figure out a way to move forward. If you have any questions about a CP501, whether in general or specific to your case, either leave a comment below or contact me. My information is in the description below. That's it for today. If you found this video helpful, please hit the like button and consider subscribing to my channel. I'll produce more content like this in the future. Thank you.